HDIL has reported a very good set of numbers this quarter. The stock, in fact, is up 6.5%. And more than the numbers, I think it's the reduction in debt that the street likes the most. Sarang Wadhawan, the Vice Chairman and Managing Director of HDIL, joins us now to talk about his numbers. Sunny, hi, good morning. You generally don't, give us separate interviews on the channel, but this time around with such good numbers, I think you just had to come out and tell us why. Your debt figures have gone down considerably, in the last, say, 6 to 8 months. Just take us through what the plan is going forward. From this 3,100 crore debt, how much do you think you could bring it down by in the next, say, 12 to 18 months? And how do you plan to do that?
I think what we've been able to achieve over the last 1 year has been exemplary. I think we've done about 15% reduction in debt from last December to this December. This last quarter we were able to reduce debt by another 140 odd crores. Over the next couple of quarters, I think we are targeting about 2,500 odd crores that our debt should be at. Our peak debt at one given point in time was 4,200 odd crores. So I think we are on track. A couple of better sales, commercial sales, residential sales are picking up, and I think we should be able to achieve that target over the next few months.
Okay. Sarang, there's one of the reports indicating that you would possibly look to reduce your debt, or the feasibility would be around 700 crores of debt reduction in the next 1 year. Is that a fair assumption?
Yeah, I think we are currently at about, net debt is about 3,100 crores. I think we're targeting 2,500 crores over the next 1 year. So a reduction of 600 crores is what we are looking at. I think at 2,500 consolidated debt, we would be very comfortable. Our cash flows and internal accruals are strong enough to service that kind of debt level. And overall, I think in these times, a company like ours, where sales are lumpy, and at the same time the market dynamics have not improved substantially over the last couple of years, I think debt reduction is what we should be looking at.
So how will you achieve this 2,500 crores? Will it be through sale of non-core assets? And if yes, what all do you have that you are looking to sell now?
We have a few properties outside of Mumbai that we are looking to offload, but at the same time, I think Mumbai by itself has the biggest amount of properties that we can actually get rid of. We have FSI transactions that we've entered into over the last few quarters, which have helped us bring the debt down. I think residential sales have picked up substantially, and because of that, there will be debt reduction through those cash flows. I think overall the scenario is improving, but it's going to be a couple of quarters before we see the actual debt reduction take place from our end.
Okay. Sarang, tell us about this Bazaar project, which is supposed to be a big trigger in terms of revenues as well for the company going forward, as per most of the analysts that look at your stock. Can you tell us more about when it will kick off? What is the potential revenue estimate? How much are you pumping into the project?
Well, I think the Bazaar project, Planet HDIL, is going to be one of the largest integrated residential developments in the city and in the state. It's a development about 500 acres. With a huge potential of about 5 crore square feet. It's going to take a little while for that project to get completed. We are looking at launching that project maybe this quarter itself. We are getting ready. We have all the approvals in hand. That will actually give us the revenue for the next 5 years, and that will be the game changer for us.
So what could the revenues be for the next 3 to 5 years? I mean, what could the run rate look like?
Well, Bazaar by itself, the pricing in that area is anywhere between 4,500 to 5,000 rupees per square foot. We have a total of about 5 crore square feet, so you can actually just guesstimate what the number could be. But our accounting methodology, I cannot give you a specific run rate because our accounting methodology is different from others, and we do not account for projects on percentage completion. So as and when we will be completing the buildings, we will be accounting for those revenues. So our revenues anyways are going to be very lumpy over the next few years.
Okay. What other projects can we expect from the group within the affordable housing segment? How big a thrust will we see from HDIL within that space?
I think we are focused primarily on residential and affordable housing now. Our focus over the next 5 years is going to be on that segment. I think that is where the potential lies. We have a couple of other properties in Panvel and other areas of MMR. Our focus remains Mumbai, and affordable housing is the next step. We like that segment. It has its own cash flows, negative cash flows. We don't need to raise any debt on that in that segment, and I think that is where the key is. That will help us reduce our debt further.
In your presentation, you stated that you have 2 new launches, Berkeley Square in Ghatkopar and Daulat Nagar in Santa Cruz. Can you just tell us about these projects? What is the rate currently over there, and how much of revenues do you think you can accrue from these projects?
You know, these projects have been with us for a few years. We've been trying to get the approvals for these projects. Berkeley Square in Pantnagar has been embroiled in the CRZ issue. It's now out. We have the approvals on hand. We're going to launch that project in the next month. Prices there are anywhere between 15,000 to 20,000 rupees a square foot. And Daulat Nagar is in Santa Cruz, which is a slum rehabilitation scheme. We have about 800,000 odd square feet out there. Revenues there also could be to the tune of about 20,000 rupees a square foot. So these are the projects that are in pipeline. We were waiting for approvals for a very long time. Over the last few years, a couple of years, we were stuck in getting or garnering these approvals. And I think now that we are poised to actually launch these projects, you're going to see a lot of noise being made on the affordable housing segment as well as the high-end luxury segment in the suburbs.
Sarang, is there a risk that the Virar project might constrain your debt reduction plans in the next 3 to 5 years, just based on the fact that you will be pumping in a significant amount of energy and funds?
Actually, it won't, because most residential projects have a negative cash flow, and our sales itself help us fund the construction. We do not envisage taking any further debt on that project. The other projects in Mumbai are helping us stem our debt down. We have FSI transactions which we are entering into. We have a few TDR transactions which are currently going on, and all of these factors and these various revenue streams are going to help us stem the debt down. So I really don't foresee any issue in coming out with or reducing the debt.
Okay, so you will be achieving this debt target only through your operational performance. There will be no non-core assets that you will sell, right?
No, we have no other non-core assets. We had the leisure business which we sold off. We sold off the entertainment business. Now it's only the operational performance that is going to help us come down.
All right, Sunny, we'll leave it at that. Thanks as always for joining us, and congratulations on your earnings this quarter. That's the word coming in from HDIL. Significant debt reduction is what they've seen, and that's the reason the stock is up and away today.